Hello, everybody. Welcome to the Ag Commodity Corner Plus podcast. It's week 73, and today is the 28th of August, 2026. Mo, what are we talking about this week?
Well, the star of the week was wheat. So we're talking about the soaring wheat futures. Is this a repeat of 22? Does everybody remember 22? Good times. Let's get into it. So let's start off with the weekly quote summary chart that we create every week. And you can see the big performance in corn, beans, meal. Again, wheat was a star. Corn traded to new contract highs for the week. So did beans. So did wheat. No bueno for canola, but got close. Cotton also traded to new contract highs above 90. And we're not talking about cotton in our podcast this week, but typically when you go to 90, it can trade as high as 100. I think if China comes in and buys some cotton from the U.S. as part of that 17 billion, we could see that very quickly as we get into, October, November. New lows in cattle. We'll get into that here with the podcast. And then maybe the only other thing, pretty quiet in stocks, but crude oil was down 383 at 363. We're not going to be talking about crude in this podcast, but, the fact that maybe Trump is going after Iran with economic pressure and sanctions is why things have calmed down a little bit. Iran and Oman have agreed to sharing revenue as part of a fee that they charge through the strait. So they claim the strait is reopened, but Trump hasn't said boo. So I don't know what the heck's going on there. But hey, we'll take a lower crude oil. By the way, before I forget, natural gas, this time of the year, if you go long, 9 out of 10 years, you make some big bucks going long futures. So this is a time of the year when farmers need to be booking that natural gas. That's usually your low, because what's ahead is the nasty winter and polar vortex, although the super strong El Nino has suppressed that. So we're not going to get early frost anytime soon. Nobody's talking about the F word. So let's get into it. Let's talk about Ukraine and Russia.
Let's start with what's been impacting the wheat market. So headline news that 300 vessels are blocked for leaving the Black Sea region from Russian reinforcements and heightened war risk. Insurance costs, volumes have collapsed with 70 ships stuck in the Danube River. Ukraine August export volume was down as much as 75 to 80% year on year. And Russian August wheat exports are the lowest since 2010. And what all this means is that wheat futures have hit the highest since 2023. And this is for almost all the wheat flavors.
This is not good. Zelensky's ordering a launch of 1,000 drones a day, up from 300. And if you think this war is over, think twice. I'm giving you the weekly charts going back to 22. You decide what you need to do with these. The 38, the 50, and the 62% retracement. We've already hit the 32% in Kansas City wheat. The next target is 9.25 at 50%. In Chicago, SRW, we haven't quite hit the 844, 32% retracement. And then Minneapolis wheat hit a new contract high this week. Nowhere near the 32 that stands around 868. But let me leave this with everybody. I started an AI stock portfolio this year just to see, what AI would do this year. And I picked 16 names, and at the time I didn't know whether these stocks would do well. In 6 months, that stock portfolio was up 238%. It was red hot, on fire. And stocks have since calmed down. Those AI stocks, including NVDA, are not red hot anymore. But I find that what's gotten red hot is the grains. Not only wheat, but also corn and beans. We'll get into that here at the end. Let's talk about Trump and trying to lower beef prices for the second time. We've seen this movie twice.
Trump announced plans to expand U.S. farmers and ranchers' ability to process and market their own food products. And this is a move aimed at reducing reliance on major meat packers. And that announcement follows what we see on the screen, which is a temporary waiver allowing 300 metric tons of imported ground beef into the U.S.
We've shown these charts before. This is your long-term 6-year, bull market. There's your channel, those two red lines above the 200. Have we traded to the lower end of the channel? Yes. Have we broken it? Yes. Have we overshot the mark? Yes. But it doesn't mean it's over. Same thing in feeders. And if you go back to October of last year, right about here, so let me show it to you, right about here. That was the first time Trump decided to let's lower beef prices because they're too high. And what did the market do? It hit the lower end of the channel, overshot the mark, just like here, and guess what? We went to new highs. Don't forget to try our program, guys. This week, we were talking to our members about how high corn futures can go. If you guys are not putting the pieces together properly, and I know my competition is not, you're going to get this wrong and you're going to leave so much money on the table, it's not funny. So you got to pay a small price to be part of our marketing club. So try it out. You got nothing to lose, but make more money. Let's talk about these new SREs.
Industry groups warned that expanded SREs, or small refinery exceptions, for the 2025 Renewable Fuel Standards, or RFS, could significantly reduce U.S. biofuel demand, and this in turn would hurt soy oil, or rather soybean farmers, at a critical time. The soy industry estimates the exemptions could result in up to $1 billion in lost value for growers due to weaker demand for soy oil-based biofuels.
Just like in cattle, this is more noise. They're trying to ruin something that's good. Obviously, the oil lobby has so much more money than the farm lobby. It's that simple, guys. Don't make it any more complicated than it is. It's weight on soy oil, but you've got this trading range. I don't think we're going to trade below 70 for long. This is short term. Once again, noise. And it has weight on canola and beans, last week, but we've recovered since.
USDA NAS has faced criticism for relying on an outdated survey system, with producer participation reportedly failing from a high 80% range to recent numbers near 35%. To modernize the agricultural data collection, the Trump admin appointed Kip Tom, who is a former U.S. ambassador to UN Food and Ag agencies, and he's the CEO of Tom Farms, to lead efforts to overhaul NAS.
Guys, this is great news heading into harvest. Why? Because we have an old USDA that everybody hates, and we got this new USDA that Kip Tom's going to try to fix, and he's going to try to move everything from analog/digital, part digital, to all digital. He was on a podcast with Chip Flory, and he was saying, Chip, the technology's there. The companies that farmers use, like Pioneer and John Deere and all those companies, they use the technology. They know exactly what's going on a day-to-day basis, but yet the farmer's always in the dark. They're always behind the 8 ball. So he's going to level the playing field. And everybody says, well, the Pro Farmer Crop Tour was 173.2, and who knows whether the USDA is going to go that low, and USDA is just going to slow walk it like they always do. Well, are they? Because Kip Tom said that he was going to announce something in early September as he makes these changes. So by the October 9th crop report, where they go into their plot data and weigh the ears and pods and all that fun stuff and see whether did a damage in this year's crop, could the USDA, if they find that damage, show you a 173.2? We've shown you before what the balance sheet can do if you go that low. So this is great news for farmers long term.
Let's look at the biggest company in the world in terms of market capitalization, and they came out with their quarterly earnings report. NVDA reported a blowout second Q fiscal 2027 earnings report, or rather, for 2026, they came out with their earnings report, delivering a record revenue of 96.2 billion. Q3 for next year expected to be 108 billion.
Yeah, so the NVIDIA, I just talked about it, how AI was red hot for the first 6 months of the year, but then it's almost done nothing since. And NVIDIA reports great quarter again. Their 2028 forecast, and some companies can't even go out to 2027, let alone 28, but they came out with a forecast that their growth, that's how solid they know their revenue is going to be. 70% versus Wall Street 44, and yet stock falls. Again, when sentiment sucks, when the mood's not there, when they don't care, it doesn't matter what you say, stocks will do nothing. And that's why I'm saying to you that the grain market right now is similar to the AI trade in the first 6 months of this year. It is red hot.
The weather maps show periodic showers expected near term, but warmer than normal temperatures and limited rainfall should support overall drying going into next week. However, a return of heat wave next week back to 90 to 100 degrees is concerning.
So for Ontario, this finish looks really good. For parts of the Midwest, it looks okay. But for those parts that are going to get that 90 to 100 degrees, it's a concern. Why? Because you want that slow cooker. And 100 degrees is going to push this crop to finish very quickly. And so you've already had damage according to Pro Farmer. You're not going to recover from that damage, and all of a sudden now you're adding more heat that you really, 80 degrees, great, but 90 to 100 is a problem.
Let's look at what's happening with the US-Canada trade situation. Trump imposed 50% tariffs on Canada, and we spoke about that in recent podcasts. After talks failed between the US and Canada has now reciprocated with its own 50% tariffs on hundreds of US goods, and that starts from September the 8th.
This is a tax on consumers. I think this has become personal. This is not business anymore. Carney should not play the same game as Trump. Both Canadians and U.S. consumers are going to get hurt from it, unfortunately. And, I don't understand the media. I don't understand people that follow this. Why am I the only one that sees it this way? But why are we negotiating a bilateral trade agreement when we should be only negotiating CUSMA, the NAFTA, old NAFTA agreement? Isn't one the same as the other? I don't get this. It makes no sense to me. Why aren't the politicians bringing it up? I don't know. I think it hurts Canada more than the U.S. because it's David versus Goliath. We're too small to matter. I know Carney wants to fight a bully, but you should have never went across the world to do other trade deals when the largest trade deal is in front of your eyes. 80% of your exports go to an unprotected border and your freight is so freaking cheap. I don't get it. Maybe these politicians should start using some common sense.
Let's touch upon the Great Ontario Yield Tour, and we had the final event this week, the West event. The 2026 Great Ontario Yield Tour is projecting new record yields for both corn and soybeans. And for corn, as you guys can see on the screen, 206 bushels per acre for this year, and beans coming in at 55 bushels per acre.
I know many of you that are watching or listening, Ontario doesn't matter in the whole grand scheme of things. We're like 2 million acres of corn compared to the United States at 95. Beans are 3.2 million compared to the 85 million in the U.S. So it can impact the local market in terms of basis. Our data does, unlike the United States, we didn't have the severe weather. In Eastern Ontario, which is in Ottawa Central, it's night and day. Last year they had a drought, but this year they just can't. They're catching so much moisture, it's not funny. They really need more heat and sunshine. They are getting some of that as we finish the crop. In southwestern Ontario, there are some hot spots where it was too dry in July, so we got some lower yields there, but it's not a disaster. It wasn't as bad as the U.S. Western Corn Belt. So plenty of counties are going to see some record highs in 2026. The Ontario farmer is actually sitting pretty nice because looks like they have the potential for some big crops coming into 26, and the United States is having some problems, and so prices are heading higher, and so they're winning both in the number of bushels and the amount of revenue they're bringing in.
Where do you think would the garden spots be for this year in the province?
Well, the garden spots are probably the eastern Ontario because they're getting all the moisture, but there are some garden spots in southwestern Ontario, like Elgin and Oxford. They've been getting plenty of the rains as well. So don't forget I wanted to thank all the scouts, farmers, and sponsors that are on the screen there. Without them, this tour could not be possible. And it was our 11th tour, moving on to number 12. So if you want to participate next year, give me a dingle, send me a direct message, or make a comment on YouTube. Let's finish off with fund flow.
Yep. As shown on the screen, some serious buying in the grain. So in corn, net length increased by over 26,000 contracts, taking net length to 376,513. In soybeans, up 46,592, taking net length to 198,254. More buying in wheat, a lot of buying in, not a lot, but some buying in canola as well.
So if you look at this chart here, it almost looks like we're near the highs from May. And so the total right now is 991,818. The high on May 5th, just before the futures hit a high on May 13th, was 1,042,000 contracts, 950. In May, we were forecasting the funds at some point in 2026 would go record long 1.5 million. I think I may be too low on that. We're currently, after this week's performance, my forecast in real time is that they're long 1.2 million contracts. I think as we head into October, if USDA is making some changes, and we're going to figure out that this corn yield is not there, maybe the bean yield's a slight bit lower, then we could easily break to new all-time record highs on both. Well, I think grain prices are going to continue their move higher. We've caught that momentum to the upside. So what would normally take 6 to 9 months to maybe hit some extreme highs, we could do within 30 to 45 days. So enjoy the ride. These grains are red hot, and remember, funds are trend followers. So when the trend is going their way, they just pile on. And I think, for the week we closed higher, so we should see that. And this is so strong because it was month end, and lately we've been seeing a lot of month end selling from the funds. In fact, they were buying instead of selling. So that is great news heading into a new month starting next week. Thanks for watching. Have a great day and a great weekend. Bye for now.
Guys.